Hello, everyone. Good evening. This is another time on the God of Indices channel to see a weekly commentary. We want to anticipate what the market will do this week so we can position ourselves to take our trades for the week, right? So before I get right into it, I would like you to hit the like button, subscribe to this channel, and also share to forex traders or share so we can be able to be of service to all forex traders that are finding difficulty in crafting their daily bias and position for the market, right? So this is the God of Indices channel, where we strive to make sure you understand how to trade and how to trade profitably. So this is our weekly commentary. We want anticipate the direction of the market, so you go into the market and you know where price is likely to draw to, right? For the week, right? So let's start by just doing an overview of the weekly time frame, right? So basically for day traders, you don't want to go above the weekly time frame, right? Even for short-term swing traders, you also don't want to go above the weekly time frame, right? So on the weekly time frame, we can see basically want to see where price is coming from and where price is currently, right? If we're looking at this place, you see that price is rejecting off, right? After this bullish candle, right? We haven't gotten any significant or any bullish closure of price above this, right? So we're getting weak rejections to the top, which is signifying that most likely we're going to get bearishness, right? So we're going to look for institutional reference points to validate the most likely bearish draw on liquidity. So looking at this, we see there's a fair value gap resting here that has not been mitigated yet. So this is the likely draw on liquidity. But there's also a possibility that price can be impulsive and want to shoot up, right? So most likely we're looking for the weekly draw to be down here. However, for day traders, you don't want to concern yourself so much of this big move to the weekly draw. You want to see how price is reacting on the daily, right? Because we formed a bullish, bearish, bullish, right? Order block here. So price can also reject off here and continue heading for the bullish side, or price can also give us a deeper bearish retracement before we continue bullish on the weekly time frame. But let's focus more, like our custom is to focus more on the daily time frame. So looking at GU, if you're looking at GU currently on daily time frame, we see we're on a bullish structure, right? On a bullish structure, we're creating higher highs and higher lows, right? So we just took out this high and we had the bullish closer here. That's why I'm tilting we're bullish, right? However, we most likely will get the retracement, but we're expecting this retracement to happen last week. It didn't happen. So the two possibilities: price can just decide to impose, just continue imposing to the upside. You never can tell, right? Or price could come down here to fill that weekly fair value gap that is somewhere around this, right? So you can see here, this is a impulsive run on price. We've not gotten any retracement into premium, into discount or equilibrium of this range, right? But looking at our candle closures, we can also still see that we're still bullish, because the last candle Thursday closed above Wednesday, and we have not got any candle to close above or below this range. So we're still trading within the range of Thursday's bullish candle, right? So that also might be a factor for the retracement. We get in the retracement down into discount before we continue bullish. However, what we teach you at the God of Indices channel, and for our GOI strategy, you can trade whatever direction. You can trade the retracement or the expansion moves, right? Because we concentrate on the daily range to find our structure in which we trade off from, right? If you don't know right? If you don't know about the GOI strategy, you can go to our channel and search on our playlist, the Profitable Trader Masterclass, and you find it there, right? So we can always find entries for every day as scalpers and day traders, right? Looking at the daily range. So most likely, these are the two likely scenarios. Also, supporting the bearish side is we took out liquidity here. We didn't get any body candle closure above this old high, right? Signifying that this was a liquidity run, and we see the next candle after the run of liquidity rejected. The next candle came down, gave us a bearish candle that also rejected this one, right? So we could say we are still within this range, right? Because if we had gotten a close, this bearish candle close below this previous bullish candle, we'll say, yeah, our bearishness is confirmed, but we are still within the range, right? Also, we want to factor in what is happening this week, right? In the market, we have news drivers in the market, we have news, trade folder, most likely might get a market maker manipulation or a market maker and push continuing the direction of the trade, right? So FOMC coming up on Wednesday will give us a likelihood that we might want to follow the market profile of getting accumulation, and Wednesday using FOMC to form the manipulation to form either the low of the week to continue bullish or to just continue bearish in the market. So I will advise you, I'll be tilting most likely to the bullish side, except I see structure otherwise on the 4 hour or 1 hour to give me bearish movement at all. I want to scalp short scalps within the daily range. So thank you guys. So this is our view for going into the week. I hope this was insightful to you and help giving you direction bias for the market, right? So trade safe and trade nicely. Don't forget to subscribe, turn on post notifications so you always get when we drop this weekly commentary, and also you can take advantage of all the other videos we have. Profitable Trader Masterclass that I started from beginner up to advanced to our GOI strategy that can print your money out of the market. Thank you. Good night. God bless.